Cool, let's get straight into it. Welcome back to the channel. This is my third kind of record this, so I'm just gonna get straight into it because I have had to start this video twice now, and it's gonna start bothering me. It's gonna start actually getting under my motherfucking skin. But yeah, no. Welcome back to the channel. So today what we're gonna be doing is basically going over just basically some weekly analysis on how to go about actually making your own weekly analysis and not depending on somebody else to make a weekly analysis for you. And that's all going to take time, patience, some perseverance, and some willingness to listen. So let's just do that. Let's start screen recording. Put it there. Put it there. Put it there. Whoop. All right, it's about to start. So 3, 2, 1, let's go. So now we're recording. So what can we see here? Well, let's just go into the weekly because I didn't show you guys this. So I feel like sneezing. I'm not gonna lie to you. I have it here. No, what the fuck is this? What's it doing, bro? The fuck? Bro, what the? Where was he? Okay, we was right around here. I don't even know, but literally it doesn't even matter where we really are, because no matter where we are on the chart, same stuff will just repeat itself. You just need to be able to know how to distinguish when it's happening and when it's not happening. So let's just go here. Just for the sake of the video, a lot of people want to understand where to enter off from, and really it's broken down into several categories. You need to be able to actually understand the highs, the lows, equilibrium. You need to be able to understand when time frames of when to trade and not to trade. Like the New York session, the London session, the Asian session, and then the Australian, New Zealand session. So yeah, so really it's just really about trying to actually understand all these things and trying to understand all these concepts and put them together. A lot of people always say to me, like I can't do this, I can't do that. But then I ask them, can you do this? And then they're like, nothing, like literally no words come out of their mouth. And I'm just like, so really in reality, you need to take time and put some time and dedication into all of these individual things that we are going to be going over and over and over again until it gets stuck in your skull, into your head, until you're like, yeah, baby, I can do this by myself, and I don't need Brian's help. Yeah, like that's how crazy I'm going with having to answer the same questions over and over again. But yeah, so anyways, you want to be able to distinguish really like the highs and lows. Like for example, if we go when you understand the highs and lows, you need to be able to, your entry needs to reflect what type of trader you are, and you need to be able to understand yourself in terms of who you are, what type, what are your advantages, what are your pros and cons individually, because somebody out there is probably very patient, and somebody out there is probably not as patient, and you can only fall into either category. Obviously you can develop skills, different attributes to your personality if you wish, and you can do that by actually doing a bunch of different things. But initially everyone is already at some type of way, so if you can distinguish what type of person you are, then that will help you and to reflect on the charts and to actually find out what type of trades you are actually going to take, whether that's swing trading, day trading, scalping, so However, with swing trading, it does have a few differences. You do take into consideration how news is going, how how interests and all that are going. In the US mainly, as the US dollar is the reserve currency of the world. So there are different tools that you can use, as well as the S&P 500. And maybe you could also trade gold, depending on what's more favorable for you, what you like. Obviously, all these different instruments and all these tools do have different volatile days, or volatile months, volatile periods, volatile time frames, and they will require you to develop some type of strategy every time, and each time you go into a different every time you begin to use a different tool. I'm just here to help you develop that strategy and help you develop yourself to becoming adaptable to the structure and to the market conditions on a daily basis. But that's from a daily or to an intraday or to a swing trader basis. So what can we do here? What we're looking for is basically some sense of direction. So what I would be doing, really, if I'm trading monthly. I mean, if I'm a scalper, I wouldn't realistically be putting on a trade on a monthly time frame. That would make no sense. So I do ideally start from the weekly, personally, anyways. So from here, what can we see? So on a weekly basis, we can see here. What can we see? We can see here. Let me just get my little itty bitty pen here. And you can see three higher highs, each higher than the previous one. And market sometimes will do this to get all those people who are trying to put buy as soon as something, as soon as a wick goes up further up than the other one. People usually do that, and it's almost like they're having some type of, I don't know what's going on in their head. Like they're just like literally going crazy. It doesn't make any sense. So really, ideally, you do want to be basically patient with some of these trades. Obviously, this is on a weekly basis. I'm not gonna be putting any trades in, but it does give some indication towards conviction in terms of one's trades if one decides to go further down into the time frame. So what can we see here? We can see three higher highs, all with different months, and even 2 different years, really. But yeah. So anyways, three higher highs. Market seems to be going up, and then actually ends up doing a liquidity sweep under here, and then after doing the liquidity sweep, it ends up going further up. My throat feels dry as fuck. Why is my throat so dry? Like, it literally feels like I'm dying. Like, what the hell? It's like something's in my mouth. Pause. Anyways, go back. Daily. Bing, bada, bow, bow, bow. Alright, cool. So here we go. Boom. Liquidity sweep. We've got a trend line here. And at this point, I am looking to basically show you guys what type of trades I'd be taking. So initially, I would be looking for a liquidity sweep, also some highs, take profits, some TPs. As obviously these are points where people have either, in this case, people have put a lot of sell trades on right here. So I would initially be looking to actually, begin to enter around this section. Really, like anywhere here, I would be entering for buys, and more or less, you do want to be putting 80% of all your trades alongside with the direction of the market, or else you will be getting screwed, and you don't want that. So, the best thing to do is to follow the trend. The trend is your best friend. Trend is your best friend. So it's like literally the trend is your best friend. So you want to be able to distinguish these low lows when they're getting swept and when there's a time to buy. The way market also reverses back into entry points is actually also very important. Sometimes they'll go straight down and basically they will flipping screw you over and over and over again, and that's fine, because as time goes by, your intuition will align more with how the market moves and with how that tool that you are using to make money from your house on your phone also develops over time. And you will begin to also spot the differences from mark to mark, from week to week, from day to day. And maybe you might even realize that maybe some days are not worth trading and some days are worth trading, and so on with also, all the months and the weeks of the year. Eventually, you will have some type of playbook that you can look back on for all your trades that will then actually help you understand what type of time throughout the next year you want to be more active on the charts, because as more time goes by, you have more data leading to more precise trades, and more precise trades meaning to more money in your pocket. So if you can really stick to that logic, then we're all good to go. So let's do this. So I think first I really want to be able to distinguish with you guys lows and highs, and really actually understand when a low is valid and when a low is not valid, and so vice versa with highs. In this case, we're on the daily. Ideally, I would only be looking for the direction of the market, even with the weekly. Monthly, with the 4 hour probably, but I do more or less enter all my trades further on lower time frames, such as the 1 minute, 3 minute, and 5 minute. In this case, I will be putting in. I'll be showing you now actually. So here we have a lower low, which has obviously taken out liquidity from everything here that was sat between 2017 and 2019, even 2018 there. So now that we've got that liquidity sweep, we are now looking into actually entering the market. So we'll go down onto the 4 hour. Let's bring this back here. And boom. Okay, so what can we see here? So market has come up, in this case, this is something I haven't gone over yet with you guys, but market has come up, made these equal highs. Those are automatically RTPs for long term, whether we're trying to enter a trade from over flipping down here or down here. We are looking to take out these TPs, and yeah. So at this point here, we have gone into accumulation, distribution, and this here would basically mean that the market's basically consolidating into actually finally going up. So once the market's finally consolidated and actually distributed further liquidity into the market, this is when we can actually begin to actually look for buys. But we can even go further in, because all in this is create opportunity for buyers to come in. So sometimes people will enter from here and get then stop lost out. That's simply because they just weren't patient enough. So you want to be able to wait and be able to enter at the right time. In this case, what can we see here? So market has actually come up from down here, creating this gap, which then will get refilled later on as I go further on into the chart. has gone up, down, high, low, a little bit of high, low, high, low, high, low, high, low, then coming down, consolidated, up, and then low, then mitigating this. Why is this important to us? Because to us, on a bigger time frame, this would basically essentially mean that liquidity has swiped Asian liquidity right here and then mitigated into this level, which had already been mitigated previously, which makes it valid for our entry point, which means that this entry point can now lead into other entries that may be around here, if that makes any sense to you guys. So usually sometimes when we're able to have one entry, that entry may lead to another entry, and that entry then leads into another entry, and that allows us to get a momentum of the market and continuously enter from a valid previous entry. In this case, this would be a valid previous entry, and we'd be looking to enter again around here, depending on what time frame or what time zones you're actually trading on. You actually want to be able to actually like understand that. Where was we? Maybe not where we was. Was it running game? I don't know. Alright, alright, so yeah, so in this case, this is where the market ended up reacting from that previous zone. Then what do we have here? We have an impulse to the upside, breaking structure, coming back down, taking all buyers out, thinking that market's going to continuously go further down. But these people don't use different time frames to distinguish whether the market's going down or up. The higher time frames will always distinguish the direction of the market. And even if I zoom out from this point on to the 4 hour or to the daily, we will be able to see that the market was actually indicated, was actually bullish. So from that point on, we would be looking to enter. And at this point, we would have a high, a low, a high, a low, a very big high, space to enter. Market comes down and mitigates our area, and we would enter from here, from this level here, like literally right here. If I'm able to just like, if I'm able to just do this, oh yeah, yeah. Alright, cool. So basically, at this point, I would mark out exactly where I'd more or less be entering from. Do that. Then I come down to the 15-minute. I'd refine my entry level point. I would go into the 5-minute. Can't go further back than this, so this would be essentially where I would be entering from, because I can't really go any further down than that. Damn, what the hell? Alright, it doesn't matter. For this case scenario, I'm just going to do that. Come down here. Boom. Boom. Come up, put this up. And even if you was to just catch that, that would be more than enough, because what we're doing in trading, we're compounding our wins. That does not mean that today, tonight, at this very moment, I need to catch a 1 to 99,500 or whatever. Like no, we are compounding our wins to lead to a bigger win at the end of the year, of the annual year, at the annual year or quarterly. Every quarter, we want to analyze our wins and analyze our losses and analyze how our performance did for that quarter. So then that way we have data on how to adjust our psychology and our strategy for the next month or for the next quarter of the year. So in this case, this would have been a 1-2. I think this even goes a little bit further up, so I'm not too sure. I think it just consolidates. Yeah, it just consolidates. I mean, the most that you could have squeezed out of this would have been, my TP would have been, my first TP would have been here, and my second TP would have been here. I'll explain where you take TPs on a different video, but really you want to be able to like have an idea of what market structure gravitates towards. There's going to be times when market structure does not gravitate towards the same type of take profit. So you need to be able to understand what zone you're in of the structure, because the market has different cycles. I personally do not, because I have enough experience, I'm able to tell what cycle I'm in. But as a new trader, you may be actually trying to. It's probably beneficial for you to know what cycle or what part of the cycle you're in. So that's something to take into account. So at this point, you would enter. So you take out your meta trader, put the lot size in. You see like an execution or a limit. So you either do either or, and you wait. Because this is, from the time it mitigates right here, it's already. I mean, if you started trading at like, let's say 12:30, you've been waiting for this to come to mitigate to your area for like a good 3 hours. So, that's why patience is key. Again, like I've literally said it on all my videos every single time. So patience is key. It comes down, mitigates, then comes back up, comes back down, consolidates for some time for actually another 2 hours, and then actually ends up going to that last TP. But the first TP would have already been taken at 4:15. But even then, from the time it's mitigated, that's literally like around half an hour. So around a bit more than half an hour actually. So really patience. Remember that you want to be able to distinguish these lows. I am gonna be making more videos on when structure is broken. When structure is broken, it does tend to, people can't distinguish when structure is being broken or when it isn't. So I will make a video dedicated to that. But anyways, that's just like, this is just an example of how you would enter, how you would actually understand where to enter from, how to enter, how to be patient, and what it really takes. Because a lot of people cannot sit down in one spot and just not do nothing, like literally just like not do nothing. Sometimes not doing nothing is better than doing something in trading. In most workplaces that does not work. So I do understand why you would have difficulty just sitting there doing nothing. So yeah, I'm literally here trying to coach you, trying to help you. So if you guys need help, let me, contact me through my email or whatever, contact me on my Instagram, and I will literally, reply back to you, and, can set something up. But from that point on, we're already kind of 22 minutes into the video. I'm going to leave it there, and I'm going to, leave you guys with that video. I'll be posting another one tomorrow. Maybe, I don't know, tomorrow Sunday. Probably I won't post another one, but yeah, maybe on Monday. We'll see what Monday has. I mean, so far for Monday, we can just go to Forex Factory. Yeah, we see. So Monday is actually tradable because there isn't any red folders. So yeah, we'll probably come and check that out and see what's going on. I do primarily like trading GU, so we'll see what's going on in GU. And yeah, I'll leave you guys with that. And yeah, peace.